The euro hunkered at a 2-month low against the dollar and a near 4-week low versus the yen on Thursday, as worries about the eurozone's growth prospects weighed on the currency after the European Central Bank's policy decision. The media report, which said that Spain is edging away from asking for aid this year, drove speculators, already positioned for further weakness, to sell the single currency aggressively. Earlier this week, Prime Minister Mariano Rajoy said conditions over a potential bailout were still being studied. The euro EUR equals x1.2725 negative 0.0045 negative 0.35% slid to a 2-month low of $1.2725 against the dollar, with traders citing stop-loss sell orders below $1.2720, which could prove magnetic. It was last trading at $1.2740, down 0.4% on the day. The euro also hit a near 4-week through against the yen. EUR/JPY equals 101.58 negative 0.57 negative 0.56%, dropping to 101.64 yen. The euro's losses saw the dollar index exceed 180.965, 0.10 plus 0.12% rise to a 2-month high of 81.001. Although the European Central Bank kept interest rates on hold as expected, some analysts say Eurozone data, including those from Germany, might prompt it to ease policy before the end of the year. Comments from ECB President Mario Draghi, who said on Wednesday the bank expected the Eurozone economy to remain weak in the near term, added to investor nervousness. Draghi is due to speak later on Thursday, and some investors expect him to lean towards a rate cut. The general theme here is that weak growth is weighing on the euro. It will be interesting to see what Draghi says today, said Stephen Sewell, global head of FX strategy at BNP Paribas. Generally speaking, we like the euro lower, especially against the crosses. The European Commission said on Wednesday the Eurozone economy will barely grow next year, forecasting slower growth than governments in the bloc's biggest economies expect. German exports also slid at their fastest pace since late last year, figures showed on Thursday, adding to evidence that the crisis has begun to inflict a heavy toll on the currency bloc's largest economy. There are fewer and fewer ways of expressing the negative view against the Eurozone other than going short the euro, and that is what we are seeing, said Peter Kinsella, currency strategist at Commerzbank. Weak data recently has certainly increased the likelihood of a rate cut later this year. With the downgrade by the ECB, it will probably be tough to implement austerity measures in the Eurozone. Investors were slightly encouraged by a Spanish bond auction which indicated reasonably healthy demand, although any rebounds in the euro is seen as a good opportunity to sell. Spain sold 4.76 billion euros of debt on Thursday, including a new 5-year bond and its first longer-term issuance since May 2011. The successful sale followed news that the Greek parliament approved, as expected, austerity measures needed to unlock aid and avert bankruptcy. Boa waited. Sterling hovered close to a 1-month high against a broadly weaker euro, after the Bank of England opted not to pump more cash into the fragile economy. Policymakers are pinning their hopes on the bank's new lending scheme amid worries about inflation. The decision, which matched expectations, is likely to have been close, with the BOE's Monetary Policy Committee having to weigh Britain's surprisingly strong exit from recession in the third quarter against signs of renewed weakness since then. The euro fell 0.2% to a low of 79.73 pence. EUR/GBP equals unavailable, just shy of a 5-week low of 79.71 pence hit on Wednesday. Sterling GBP equals 1.597 to negative 0.001 to negative 0.07%, was down 0.3% against the dollar at $1.5940. The dollar extended the previous session's gains, as focus quickly shifted from President Barack Obama's re-election to the fiscal cliff that threatens to push the U.S. economy into a renewed recession next year. About $600 billion in government spending cuts and higher taxes will kick in early next year, unless U.S. lawmakers take steps to reduce the deficit. The dollar has been helped by safe haven inflows due to uncertainty stemming from the fiscal cliff, and those positions could be unwound if a resolution is reached. It looks like Obama is likely to legislate away much of the fiscal cliff, and I think dollar is likely to weaken, BNP's Sewell said. The dollar slipped 0.2% to 79.85 yen. JT equals X 79.83 negative 0.16 negative 0.2%, staying below a 6-month high of 80.68 yen set last week.